Hello and welcome. We're here at Holistic Investments, and I'm your host, Konstantin Kogan. And I'm excited to have an amazing guest today, Seamus Rocca, who's the CEO of Xapo. Hi, Seamus.
Hi, Constantine. Thanks for having me.
Thanks for being here, and excited to talk about the banking and how challenging it is to onboard crypto companies, right? And I hopefully gonna give us a lot of insights, how to streamline this experience, right? Before that, that traditionally, because we are very careful with legal and compliance, right? So we're going to go with traditional disclosure that this content is for informational purposes only. You should not construe any such information or any other material as legal, tax, investment, financial, or any other advice. Now we're off the hook, so now we can talk about a lot of things. Now, I want to start with you, Seamus. I know that you
Sure.
have an exceptional traditional banking career, right? So I've seen like you've been in like literally one of the best like institutions, Credit Suisse, Marquis Group, like Standard Charter, and now you've been CFO of Xapo. Now you're the CEO of Xapo. So can you talk a little bit about your journey and what excites you about Web3?
Sure. My journey started as an accountant. I qualified with Arthur Anderson. They don't even exist anymore, so that's a bit of an indication of how old I am, Constantine. Yeah, I'm a qualified accountant by trade. Joined banking in London in the 90s, and having grown up in Gibraltar, I desperately wanted to travel the world. So from London, with Credit Suisse, I went to New York, Mexico, then I went to Australia, worked in Japan, I worked in Singapore, back to London. And banking and finance was something that allowed me to travel the world, see a lot of the world. Um, it also allowed me to sort of get a great career and become fairly senior within the banking space. But working for big, large organizations can also be quite frustrating if you want to innovate, if you want to move and do things quickly. And I could see that, fintech was something that was starting to be on the rise. And then alongside fintech, after fintech started to, come the Web3 space. And I made the decision back in, 2016, 17, that I wanted to jump from the big banks into fintech. And I met the founder of Xapo, Wences, who was incredibly well respected within the Bitcoin community. And he asked me to join Xapo as the CFO. Because even back then, Wences was a big believer on being regulated. If Bitcoin and crypto was to be taken seriously, it needed to be regulated, and needed to be licensed, because it was a way of, he saw Bitcoin as something that could help revolutionize the financial system. And if you want to do that to some degree, you need to take some of those facets of regulation from the industry to generate trust to be able to for Zapper to scale and grow. So he brought me on board to help Zapper get all of its banking licenses and a lot of the legal license infrastructure that we have today. And that's how my journey with Web3 began. So at first it was like this idea of, the big banks are no longer for me. I've gone as senior as I want to go in my career. I want to work in a much more nimble innovation environment where you can have an impact and do a lot more quickly. And Zapper was perfect for me, and that was both a bit of fintech, but also Web3, in particular Bitcoin, which is what Zapper focuses on. And with for anybody out there who's into Bitcoin, once you get orange pilled, there is no going back. So, I would say that I'm much more of a sort of ardent Bitcoin advocate than I am sort of a Web3 proponent. There are many interesting technologies within Web3, but my home base, where I'm more comfortable with is clearly Bitcoin, and that's something that at Zapper we're very passionate about. Everything that we do revolves around, banking your Bitcoin.
And that's actually fascinating, right? And Xapo is said to be like one of those largest custodian of Bitcoin in the world and believed to have hold like over like $10 billion of cryptocurrency like in their underground vaults and like on different continents. But I think what is interesting also, not many people would remember that Xapo started as a Bitcoin wallet and vault service, and
Hmm?
then that's the strategic rationale behind the transitioning was to kind of get a fully licensed bank, and that's like Vincent was the CEO before, and then you kind of came down and like structured it, right? So can you help us to understand a little bit of like how was this transition, why it was decided to actually like become a bank, and how you're different from any other bank?
Yeah, it's a great question. I think, we started off as a Bitcoin wallet, like you say, first and foremost. And when we first got investment back in 2013, if you think about 2013 and how far Bitcoin has come since then, if we were a traditional bank, it'd be like, the 1600s would be like the Venetians of banking, right? So we're that equivalent in the Bitcoin space. And, we started off as a wallet. But obviously, once you started to get more and more people, especially large institutions that wanted access to Bitcoin, you need two things. One is you need an on-ramp to be able to buy the Bitcoin with fiat. And second of all, you need a safe place to hold the keys. So that's how we developed the custody service, which is, how do we keep people's Bitcoin safe? The equivalent in a bank in traditional fiat is when you put your money on deposit on a bank, your minimum expectation is that the bank keeps your money safe, physically safe, right? You're supposed to having your money under a bed. Even though it's all digital these days, we have this, emotional notion that banks have got all your money stuck in a vault in a safe somewhere. But of course, that's not the case. Well, I think, it's that similar concept within Bitcoin that says we need to be a safe place to keep your Bitcoin. Um, and then what we realized is as we sort of grew that business, that this idea of having on-ramps to be able to buy the Bitcoin in the first place was a really big challenge. And then once you had the Bitcoin, you know, how do you generate that trust for people to say, well, how do I really know you have my coins and this and the other? So we went on a journey to say, look, how do we find payment rails? How do we become regulated? And back in 2013, there was no regulation anywhere on the planet from any jurisdiction on anything to do with Bitcoin, right? So we went on a journey to do that. We went to almost just every financial center on the planet, literally begging to be regulated, right? But back in those days, it was still very early. If you think about where we are now, we've gone on a journey where we went, all right, let's find more payment rails, let's become more regulated. And on that journey, what we realized was, look, rather than find a banking institution that could service us and work with us, if we wanted to build the Zapper that we felt that Bitcoiners deserved, which is a place where you could do all the things with your Bitcoin that you would expect a traditional bank to be able to do with your fiat. Keep it safe, transact, spend it with a card, earn interest, and borrow against it. That's what you do with a basic bank account, right? It's very difficult to do that in one place with all your Bitcoin. That's what we're trying to achieve, right? And we've been building that slowly but surely. But what we realized along the way is that when you deal in Bitcoin, there's still now, imagine back then, a lot of nervousness around it within the financial institution space, the traditional space. So one day you'll have a payment rail, the next day you don't. One day you have a card provider, the next day you don't. So we made a strategic decision that said, look, we need to be in control of our own destiny.
Mm.
So the only way to do that is to build your own bank. So we went on that journey of becoming a bank so that we could have a bank dedicated to the needs of Bitcoin. Now, we have a regulated entity for the custody of the Bitcoin space, the VASP, and alongside it, we have a bank. And between those two entities, even though they do slightly different things, in the product, as far as the customer is concerned, it all feels like one experience. So that's how we are sort of innovating and creating this product whereby you essentially what you have in your pocket on the phone is a bridge between traditional banking in dollars and a bank account, what is a quasi bank account that feels like a bank account for your Bitcoin, doing all the things that you would expect to do with fiat, but with Bitcoin. The only way you could do that and innovate is we needed our own bank, and that's why we created Zapper Bank.
And how many countries are you servicing as of now?
We service something like 45 countries. I mean, the number changes all the time. But again, we've tested a lot of different technologies in terms of IDs that we can use. We've used multi-vendors in different countries. But what we found is that the only standardized form of ID globally is the passport. So that's the reason why, sometimes people say, oh, why can't I use my driving license or my ID? With every bit of identification that you add, if you multiply that by the number of IDs per country and number of countries in the world, it gets exponentially more and more complex. So that's one of the reasons why we always focus on passports and say, look, I know it's a pain to go and have to find your passport, but it's the best way for us to be able to be secure that we are, because it's very difficult to forge a passport. So that's the best way to keep Zapper secure, that we've got genuine customers with a genuine ID. But it's also a good way for us to be able to serve as much of the world as humanly possible.
Beautiful. And well, so I will ask you in a few about your challenges operating these operations because I'm sure there's plenty, right?
Many, yeah.
Yes, but first I will share with you mine. Since I have you here, I have the luxury of talking to a banker and like literally complaining. So one of the key challenges, and by the way, like us, a lot of our portfolio companies, our partners, they're experiencing exactly the same challenges. So you can imagine a lot of crypto legit businesses are registered in jurisdictions which are I don't know, either Caribbean islands or Dubai or other
Hmm.
offshore entities, right? So the combination of crypto and offshore does not go well with compliance, right?
Yes,
So
absolutely.
some of the people are rejected 30 times by every single bank existing on the planet Earth. And for months, operating a company, they cannot get a bank account. Like it's insane how bad it is, right? And I've never like thought that it's that bad until I've experienced it myself, right?
Yeah.
So what do you think, like, how do you think like it's gonna change? Because, like the fact that it's like you are a particular citizen of a particular country and you have a combination of crypto business, which is a completely legitimate business, and you're still not onboarded. What do you think we need to do, like, in both as a banking and like, partners and as a business so that you will become much better?
Yeah, look, I think that's the million-dollar question. I've been involved with Zapper for 8 years. Zapper's been around for 11, 12. Um, and I mean, it used to be even more challenging than it is today, but it still remains a challenge.
Yeah.
And even for a while, when things were getting a little bit better in the US, you had Silvergate was an excellent provider of dollar clearing services, Signature, Silicon Valley Bank. Overnight you had an adverse administration and they all got shut down. So the risks and the threats are very real, and that's one of the reasons why it's very challenging to run a crypto business for all the reasons that you've mentioned. um, what I found along the way is that there has to be almost a bit more of a balance between, okay, how do I, at least this has been my approach, Constantine, and I can't necessarily say, hey, this is the approach that everybody should follow and that I've got the magical cure that is going to fix all the world's ailments, because we're all still on a journey. But I think it's a little bit about, well, how I've spent a lot of my time educating financial institutions and regulators and people from other countries. Look, this is what we can do using Chainalysis, and this is what we do in terms of our compliance program. So we've elevated ourselves to the standard of an international bank, and we've invested heavily in having to do that, because that way, when you start sitting down with people who work in that bank, you have people that speak their language. So we elevated ourselves to be able to have that commonality between our legal and compliance departments and those of a traditional bank. And then what we've also done is, well, how can we leverage some of the tools and the skills that we've developed to train the people in those institutions so that they learn more about crypto and the capabilities of blockchain, which are unbelievable, which are not even available within TradFi for compliance purposes, and therefore trying to sort of create that bridge. Because, you know, it's quite a painful process. First of all, you got to convince them to sit down on the table to even talk to you. Once you've done that, you're going to get them comfortable. And once you get them comfortable, you still have to get it over the line of their risk committees and all other aspects. So you really have to invest a lot of time and energy on going on a journey of building trust. And at the end of the day, trust is earned. So you got to prove to these institutions that you know what you're doing, that you're doing the right things. And even when you do that, the fact that you're based in jurisdictions that are perhaps not as respected as your traditional financial centers, it is a difficult journey. There's no two way about it, and it's a difficult challenge. So I think that you have to invest time and energy and be ready to be resilient for the long road. But I do think that you know we've come a long way. The price of Bitcoin certainly helps. I think IBIT helped to bring in institutional money. I see a world where eventually we'll reach a tipping point where traditional financial services will start viewing Bitcoin as part of uh, any investment portfolio should be thinking about having Bitcoin. The moment that that happens, you start thinking about, well, for more professional investors, how do you create leverage? How do I borrow against it? How do I have option structures around it? And there is some of that happening today, but it's perhaps not as sophisticated as it would be in the traditional space. The moment that that starts to happen and it becomes sort of ingrained in the institutional space, it's only a matter of time before it starts to trickle down. I think one of the challenges that we face here is that, crypto started off as something that was retail mass market, right? And we as a community have tried to take it forward as far as we can. But it hits that sort of crunch point where without the acceptance and adoption from the traditional space, it's very difficult to operate with money without access to payment rails. So there has to be a connectivity and a desire on both sides to bridge that gap. And I think that it's slow, it'll take time, but it will happen.
Yeah, 100%. I couldn't agree more. And look, so how do you balance this innovation with regulatory and compliance, especially in jurisdictions with strict financial laws, right? For example, like you mentioned that like you're talking about worldwide, you exclude US. We probably all understand why, right? Because the
Yeah.
facility. And by the way, hopefully it will change. I had a
Mm,
pleasure of meeting actually the chairman of Signature Bank recently, right? And he
right.
explained me how they were like literally slaughtered. Like, and I cannot find a better word, right? There's
Yeah.
nothing. They were processing over $1 trillion in transactions. They were, by the way, what I was surprised to learn that a lot of it was traditional businesses. I'm talking about shipment. I'm talking about like,
Yeah.
really day-to-day proper big businesses. Has nothing to do with like even financial services. That was much needed. And there's a gap right now in the market, like especially in the US. And I know there are several banks right now in the working, but I'm curious, do you have this ambition to go and capture, like with this current administration, to go and capture some of the US soil like market share?
I think I do have ambitions to figure out ways to leverage the banking license to be able um, to have dollar rails, right? So the dollar by design is, and the Fed has an open policy on the fact that they want the dollar to be the the trade finance currency of the world. So most trade financing on the planet happens in dollars, even from goods that get shipped from Asia all over the world. It's still settled in dollars. So all dollars on the planet clear via the US. So there are plenty of banks on the planet that don't have a US presence, but do have dollar clearing capabilities. So for a small company like Zapper, that's incredibly ambitious, but I do think that it's doable. We've been around for 11, 12 years. We've been regulated for a very long time. We've got the right skills, processes, and people to be able to do it. So I do see a longer term ambition whereby, this notion that you've got to be in control of your own destiny rather than relying on a partner. How can we make sure that we're building a bank that's robust and resilient, and that we can stand on our own 2 feet? Right. So I think there's an opportunity to do that. I think getting market share in the US itself, I think it's challenging for any organization of a small size to be able to do the US and the rest of the world. I think you kind of have to do one or the other. Doing both at the same time is very difficult. And I'm not saying for a second that it's not desirable. I would love to have market share in the US, um, but the US is a very specific. It's its own beast, right? 50 different states, each with their own money transmission rules and regulations. Some states are more pro crypto than others. Unclear where they stand at a federal level. Every 4 years, new administration, new thinking, and new rules. It just feels like it would be a big endeavor and quite risky from that perspective, because of the lack of certainty and clarity. And if you want to make an investment, you want certainty and clarity, and we don't have it right now. But also, if I'm honest, despite the regulatory side bit aside, if you think about what we are, this idea of, we're an offshore bank where you got your dollars and your Bitcoin, would that resonate in the US? Well, you can just walk down the high street and open up a dollar bank account, and you can go to Coinbase and get a custody account. So I'm not 100% sure if there will be demand for our product. But maybe there is. Look, we still get a lot of American customers that try to onboard on Xapo, and they're always disappointed when we say that we don't serve the US. So who knows? One day, if the noise is loud enough and there's enough demand, we find a pragmatic way of serving the US. Never say never, but right now it's not on my radar. The biggest issue right now for all of us is, if Silvergate, Signature, and Silicon Valley Bank are not around, there aren't any crypto native institutions that are willing to do any settlements in dollars for anybody in the crypto space, and that's a challenge.
So let me ask you, for that to happen, right? What, like you mentioned, so you need a counterparty, you need a partner, so to speak, in the US that will have, like, on a federal level, on a state level, all the licenses, compliant, etc. So let's imagine you have this one bank that is already doing that, right? It's coming up soon. Like, now, what other elements, in your opinion, for this to happen, right? They like need to be like 1 to 3 points, if you may.
Well, I think if you mean in general for the industry, or you mean in terms of
And
for
then for
Zapper?
you to actually consider it seriously, right? So let's
Yeah,
imagine the regulations like are there, like, and they like the current administration is pushing it for, right? You have new banks created, you have more flexible environment. What else needs to happen for you to actually consider even more seriously to go ahead and move forward?
yeah. I think there would need to be, if you think about in Europe, for example, you have, and I'm not saying by any stretch of the imagination that Europe is more advanced in regulation or whatever, but this idea of the EEA means that there's a common currency. Well, you've got the US and US, great. But if you get a license in Europe, for example, it applies to all the member states, right? If I go get a money transmission license in Montana or any state in the US, it only applies to that state. So I've got to go and get 50 licenses for every single state if I want to have a US business where you can send money everywhere, right? It's not viable for anybody to enter the market and have to go and get 50 licenses, right? So you kind of need somebody who would be able to provide those rails and be willing to serve the crypto space. That's going to be incredibly difficult to do if you're going to have to make that kind of an investment. And then you know that maybe in 3 years, if the Republicans don't win that next election and the Democrats come back in, are they going to be crypto friendly or are they not? So I think the key thing that we need is, is there a bipartisan view on this desire that Trump mentioned of bringing the crypto industry to the US? I think it would be incredibly dumb of the US not to do that because it's there for the taking, right? But of course, I'm a little bit biased with that view. Would the Democrats feel the same way? I don't know, and because I don't know, I wouldn't be willing to make that investment. So I think there needs to be clarity and certainty at sort of a nation level in terms of politicians. Then there needs to be the right partners locally that you could work with, where you don't have to go and do all the heavy lifting and the building of all the infrastructure yourself, because that doesn't scale.
Yeah. I think what we've seen is a very unique situation where crypto as an industry was the second largest donor to both political parties like in this cycle. And what we've seen that it has incredible amount of like power, right? Because of 50 million people who are actively like, wallet holders in the United States and people who actually care about decentralization or care about the values of crypto. So I think it will be impossible to ignore. And there was a lot of mistakes done by a particular party, like for not looking into this more seriously. So that I'm less worried about. But I do agree with you. But the problem is then you have an SEC chairman or someone else who's a little bit hostile, right? And then it creates more challenges. But let's talk about like the positive aspect, right?
Mm.
So let's imagine right now like the Stablecoin Act is coming out soon, like which is incredibly important for our industry. I think this is one of the important steps. Uh, Personally, by the way, I'm very happy that the current administration has a very strong stance against the CBDC, right? Because I've done enough studies to understand that there are some big risks of implementing CBDCs. However, if we talk about it openly, you mentioned Europe. In European case, it's exactly the opposite. Europe going like full force into the digitized euro, which is equivalent to CBDC, right? So I want to hear your stance on this because I think it's a very important topic that most of the people are not looking into this, that the central bank digital currencies. How do you see Bitcoin fitting into the financial landscape? How do you see CBDCs fitting into daily life and financial ecosystem?
Yeah, I think that's quite a broad topic right there that you throw my way. So I'll try my best and sort of break it down. But there's the point of it around CBDCs and the stable coins and how Bitcoin fits within that. Let's try and break the three down. I think that today most money on the planet is electronic anyway, right? And I think it, it might sound obvious for those who know, but I'm not sure that's an intuitive thing for everybody. So I think there's this notion that, central banks go away and physically print the money. It's actually electronic. They literally push a button and go, right, we've printed,
Brilliant.
whatever amount of money, $1 trillion, whatever the hell they've been approved to do within the budget, right? So it's done electronically. Then you think about a lot of the settlement systems that sit within central banks. You think about FedWire in the US, you think about CHAPS in the UK, most of them were built in the 60s. I mean, think about it. The technology that is used for those systems was around when, we put the man on the moon, right? And in this day and age, your iPhone has more processing power than the Apollo 11. So I mean, these systems are archaic, right? And as a result, there is a need for an overhaul. And it's a little bit like, well, look, if you were upgrading the whole your phone in your house, you've got an option to say, okay, I've got a landline and I want to upgrade, I want to change all the cables and all the wires, and I'm going to get the next best landline possible. Most of us just, why bother? Just get a mobile. Who calls a landline anymore? I can't remember the last time I called anybody on a landline. I just call
Totally.
them on their mobile, right? Exactly, or push the digits. You just use a mobile and you bypass the need to sort of rewire all the infrastructure, which is already obsolete. So I think that for me, you know, part of the challenge of this conversation of CBDCs and stablecoins is central banks are always going to be inherently worried about not having monetary control, right? Through interest rates and the ability to, buy back money through treasury bills and impact liquidity and what they can issue electronically, to try and control deficits or whatever. They have a limited number of tools to be able to, control the economy in inverted commas. So their fear is, okay, well, how could stable coins or CBDCs affect that? Well, in my view, that's kind of the wrong way to think about it. I think that actually the fundamental benefit of thinking about, blockchain is how can you think about blockchain as this idea of the mobile phone rather than the line, right? How can we think about it as a way that it upgrades the infrastructure that is literally 50 years old? And I think the moment you think about it that way, you can still have all that monetary power and process in place, but you're just doing it with CBDCs. And then when you think about doing cross-border payments, think about how much cheaper, faster, and more enabling it would be to have cross-border payments 24/7 if it's electronic, right? And if it's on blockchain, it's much easier to track, it's much easier to do many, many things with it that you can't do with the existing system. And I think that, that technology kind of exists today within stablecoins. And if we're used to Web3, we as a bank, we actually accept stablecoins as a replacement to Swift. So we see that as the future. Why do a Swift transaction that takes 5 days, right? Can't do it over the weekend, costs you $30 when one click and you can just send USDC or USDT. It's a no-brainer, right? So yeah, exactly. So from that perspective, a lot of the learnings from stablecoins in terms of the technology and the benefits of that technology could be applied to CBDC. The biggest issue there is like, look, you always have political interest. You always have the existing banks, all of which are enormous conglomerates. Imagine going to a JP Morgan or an HSBC and saying, hey, you need to overhaul all of your payment infrastructure and all your teams and all your know-how, and now everything's going to be done linking to blockchain technology within the central bank. It would take them 30 years to figure out how to do that in a way that they can roll it out for all of the existing operation. It's a big challenge. So I think rather than try and figure out, well, how could we move to the mobile phone in a way that's safe, that we could do it step by step? I think there's just a lot of scaremongering, a lot of, what if this, what if that? I think at the end of the day, the starting point for me needs to be, what are the goals that we're trying to solve for, right? And if the goal that we're trying to solve for is to make all of the settlement infrastructure much more suited and much more technologically advanced for an international trade financing planet where transactions need to happen in the trillions every day, and how can we use blockchain technology to leverage that, and how can we take learnings from stable coins, then I think it's a different mindset from which you're approaching the problem. It's here's something we can leverage, as opposed to something that we need to be afraid of. But I think that one is still going to be a long way away. I mean, when I started in 2016, 2017, the SEC was still talking about whether Bitcoin and Ethereum were a security or not. To some degree, that debate kind of still happening 7, 8 years later. So for us to see a resolution as to where we're going to go with CBDCs and stablecoins it's going to take a long time. But I think an overhaul is needed. And then you think about Bitcoin. Well, look, I have a bit of a crazy idea on this, which may or may not age well. But if you think about back in the day, the reserves of central banks were backed by gold, physical gold. So if you go to the Bank of England today, they still have gold reserves in their basement, right? Not all of it is owned by the Bank of England, but they still have gold. And in the US, you've got Fort Knox. Now, they decoupled the currency from gold as a standard in 73, a long, long time ago. But there's still this concept of money is backed by gold, whereas money is really just an IOU, right? Without you having to carry a gold coin around. Well, what if that backing is Bitcoin itself? If you have something that's finite, there's only 21 million of them, and something that we all agree has value, just like we all agreed 2,000-3,000 years ago that gold as a standard has value, why can't Bitcoin be the standard? Because it's a unit of account where everybody on the planet knows what a Bitcoin is worth in their own currency. So there is an element where this idea, at the moment, we've got this concept of a strategic reserve, and I think the fact that it's just confiscated Bitcoin perhaps has disappointed some people. But I think that's a great initiative where, maybe it's not going to happen in 1 or 2 years, Konstantin, but maybe 20 years from now, Bitcoin is actually part of the reserve that backs actual currency.
Interesting. So yeah, I mean, I agree with you that like there's a lot of challenges right now that you mentioned, but like if we go into a shorter version of like the predictions, right? You mentioned it's going to take time, right? So, but let's talk about the practicality because I don't think we have a lot of time. Like I don't want to sound like skeptical, but we're in 2025. We're recording this podcast, right? In 10 years with an advance of AI and like all the agents that are gonna like be able to operate the financial ecosystem better than any human being, we're gonna be forced to upgrade. It's not gonna be optional anymore. It's gonna be something that is gonna be necessary, right? And the countries and the economies that will do it faster, they will have a much better, I would say, like, dominance in the market because they will provide the global trade and everything. So I think US is now kind of forced to kind of like reintegrate those existing like legacy systems like back to the new rails, right? So but we also understand, you mentioned clearinghouses, like if we talk about it openly, there are old players who are not willing to play along because they are going to be disrupted. They're going to be
Yep.
out of business, right? I mean, there's, clearinghouses and settlement houses that are processing trillions of dollars every day. They have commissions. Why would, like, if blockchain becomes like something like global, they will be out of business, right? So, what trends are you seeing in the coming 5 to 10 years that most of the people don't oversee? Like, I mean, is something you can share that you think is gonna inevitably happen?
Um, Well, what I do have conviction on is that Bitcoin is something that is going to be increasingly a part of people's investment portfolios. If you think about diversified investment, if you think about the potential upside of Bitcoin, why would somebody not want to have a potential upside on that? So I definitely have conviction on that. Um, I think the idea of payment rails and where that goes, you've said it yourself, it, it's very difficult um, to change where we are today because of all the vested interests of the people who've been running it and of course making money out of it, especially when you've got lobbying interests and some governments are going to be saying, yeah, we absolutely need to do this. Other people are saying, no, this is crazy. We shouldn't touch crypto. So I think until I think you said before that you've got this notion that we have no choice. We're in 2025. We have to do it. I'm not sure that everybody sees it that way. So unless there's a need created that, okay, this is a genuine problem we need to solve, I think the vested interests are to keep it the way that it is right now and not change it. So I think that it's something that we're going to have to figure out how we address over time.
So now I think it's good to also discuss like some of the other issues, like, but about I would say the security challenges of a lot of like protocols, and I think this is the time where DeFi is on the rise, and I'm very excited about it, to be frank with you, like, because I do believe like the yield that like DeFi providers are offering right now are like much stronger than any bank in the world, right? Like, but so what I'm seeing, there's a hybrid models where a lot of banks they're starting to integrate with DeFi providers as well, like, or providing similar services on this, whether it's Bitcoin or stablecoin, like yield and deposits. But at the same time, what I've learned, what we're seeing practically, that there's a lot of challenges and like security and perception, right? So in your kind of operations, right? How do you leverage this security issues? Like, what guardrails do you have? Like, have you ever had breaches in security, or is it even possible?
Um, no, we've never lost any Bitcoin, and security is something that we take very seriously. There's, you know, in terms of a breach of the bunker and MPC and everything that we do, that's always going to be difficult. if not impossible, dare I say it. But the attackers are always going to focus on phishing. They're always going to focus on the people that work in the company and how can they sort of get in through their access. So that's something that we're always fighting all the time. We do a lot of training and we involve a lot of systems in keeping the company secure that way. So, security is a big aspect of what we do in place. And look, all of our infrastructure, we've had it for a very long time. We went from multi-sig to MPC, but we still have an element of physicality within the bunker, particularly around our cosigner and how that works. So there's huge amounts of investment, time, and energy that we do around security. And the key theme there on the security aspect is, look, the amount of investment, time, money, and energy that we throw at security is something that you can't really replace at home. Right. And I know that there's always this debate around self custody, but self custody is great until it fails. And if you think about the element of, backups, you might need to be thinking about, what alternative options and where you keep your keys and everything else. Self custody is not trivial. For those who do it, they might say, yeah, it's very easy. But I'm not sure self custody is something that works for everyone. Like my mum couldn't do self custody, right? So there's an element of knowledge required to be able to do self custody to do it well, which means that it prevents crypto from going mainstream if only people that are technologically savvy can do it. So I think there's a lot of aspects around security where how can we provide that security so you don't have to, right? Then obviously there's an element of trust, but that's where the regulation comes in. That's where the fact that we, have to make certain disclosures to our customers and what have you. There's a lot of information we provide on the website as to how we keep the coin secure. But I think on the security side, for us, it's a big part of our brand, so we need to make sure that people trust us all the time, and they can see that they're comfortable with the fact that we're keeping their coins safe without giving away so much information that we're providing, we're making ourselves a target with the people that are constantly attacking us. It's a balance that we need to strike between how much information do we provide, right, versus making ourselves a massive target for hackers. So that's something that we're always grappling with. If you go into the DeFi space, I think for me, DeFi is a bit like what you were saying before. It's something that's hugely exciting, but it doesn't mean that it doesn't have its challenges. And I think there's the two key challenges that I see is, from a technology perspective and the goal of what it's hoping to solve for, what it's trying to achieve is great. There's two key issues that I see with it. One is once you put your coins into DeFi and goes into a pool, when those coins come back out, it creates a risk from a compliance perspective to activate money laundering channels, if that makes sense. So that means that DeFi is always going to, this idea of what we were saying before, how do you bridge trust with traditional financial services where we need the on-ramps and the off-ramps and everything else, if now in DeFi there's this sense of, okay, well, how do you know which coins are clean, which ones are potentially not, which is one of the big advantages of what we do have in the blockchain today. And I'm not saying that problem isn't insurmountable, but it's one of the problems that need to be solved for. And I think the second one is, look, we've been developing a yield product on Bitcoin for a long time. We're going to launch one in the not too distant future that is wrapped in a fund, and there's a prospectus that will come with that will allow you to read and understand how we're investing the coins so that you can earn that yield. I think one of the issues that I see in the DeFi space is it's very easy to promise 3,000 APR returns on your investment. Yield never comes with zero risk. Right? Essentially, what you're getting paid in terms of yield is normally, a determinant of the element of risk of that investment. So this idea of keeping your coins safe, people come to a place like Zapper because they really value our security and the fact that we're custodian and regulated. So if we provide a yield product, people want to be comfortable that, yes, there's a bit of risk with that yield, but it's low risk because if you had a massive risk appetite, you probably have all your coins in an exchange and be trading them all day as opposed to having them somewhere like Zapper, right? And I think it's a little bit the same with DeFi, which is if you're going to put your coins in DeFi, be wary of those that promise ridiculous returns because 9 times out of 10, you don't really know what they're doing with your coins. And if you don't know what they're doing with your coins or you don't understand it, that's when trouble ensues.
So where do you get your yield from?
So the
You
way
have
that,
1%, you have 1% on Bitcoin and about
yeah,
what about 4% on USD.
sure. So the dollar side is much easier than the Bitcoin side. So let's do the dollar side. On the dollar side, we're a narrow bank. So we pay around 4% because we're a bank. We get customer deposits. We're licensed to do that. And then what a normal bank would do is pool your deposits and lend them out as mortgages, right? So you have fractional reserve banking. We don't do that. We're a narrow bank. So we get the deposits and we put them into US treasuries and money markets and we keep some liquidity. All of that is less than 3 months tenor. So essentially, we could liquidate the entire book within weeks and have everybody's money back at any given point in time. But even with less than 3 months tenor, and a lot of it, more than half the book is overnight, with where rates are today, we're earning, 4.5%. We keep a fraction of that as interest income, and the rest we pay away to the customers. And of course, the customers find that return attractive, so they give us more money, and of course, we grow the balance sheet. But that's how we earn money on the bank. So on the Bitcoin side, what we've always tried to do is saying, look, how do we replicate what's always been done in traditional finance in the Bitcoin side? So we're not reinventing the wheel. We're just doing it with a different asset or different currency, but it's the same concept. So essentially, what we're doing there is the institutional space is something that we've always been engaged with. We used to serve institutions in the past. We're thinking of going back to doing that in the not too distant future. So we're well known within the institutional space, and we're also a custodian. So we're always long Bitcoin. So what we've been doing with our own coins for a while, not with the customer coins, but we're doing it with our own coins, is lending those coins out to some of the liquidity providers for the ETF creators. And therefore, they've got settlement risk. They need exposure to Bitcoin to avoid that settlement risk. So we create facilities where they can borrow coins, right? So essentially, that's very much focused on the institutional space. And we can do that because we're a player in that market. But if you're in the retail space, you don't have access to that. So essentially, what we're doing is saying, well, if we put that as a product into a fund, if you invest into the fund, you're essentially getting a return from that fund from all those investments that we're doing. That we then have to think about in the perspective, well, what are the types of institutions that we're allowed to lend to? We've got all this criteria, but it's open kimono. You know what the risk is, and you know how we're making the yield. It isn't huge yield, it's 3-4%, but it's better than zero, and you understand the risk.
What about Bitcoin?
No, it's Bitcoin denominated.
Okay, got it. So
So that
1% Bitcoin is also like,
So at
because
the moment, we're doing that with our coins. What I've just explained on the Bitcoin side with institutions, we're doing with our coins. We are about to launch a fund where you can invest in that fund and take part of what we're doing with that. That will replace the 1%, because the 1% was almost like us testing the market to see if people had demand for yield. And what we saw was huge demand. All of our customers wanted that yield, not all of their coins, but a big chunk of it. So we can see that hodlers, a lot of our customers are people who've held Bitcoin for a long time. We can see clearly that hodlers have an appetite for yield. So we've been working on this investment product for a while to be able to do it with their coins rather than ours. And that's a product that we're about to launch soon. So that will be the 3% that I'm talking about. So that should be a big market launch that we hopefully can do in a few months.
and that's amazing. So now, but are you looking to integrate some of the DeFi protocols or I don't know, some of the DeFi solutions?
Yeah, well, look, we've been looking at we've been looking at DeFi protocols and potential solutions for a while. One of the issues that we have, of course, is that we're Bitcoin denominated, and up until now, a lot of DeFi is very much Ethereum denominated. That's changing, and there's a lot of people out there focusing on layer twos on Bitcoin and the DeFi space and what have you. So we're always keeping a keen eye on what's happening there, because in the same way as we are going to launch a fund that gives you access to investing into essentially the liquidity providers of the institutional space. I see no reason why maybe in the future we can create access to, DeFi protocols via a similar wrapper, where rather than doing it directly yourself, you can just within the Zapper product say, our treasury does it for you. Because if you think about it, going into a DeFi protocol and having to deploy the Bitcoin and track it yourself and keep it safe, move it back to self-custody. Yes, all of that is possible, right? But it's a little bit like almost like going back to the old days of having to plug your computer into a modem onto the phone, right? Nowadays, everybody just wants Wi-Fi. You want simplicity. So a big part of what we do with our product, Constantine, is we just simplify it for people. So look, leave the security aspects, leave all the risk stuff to us. In your product, how much risk do you want to put into DeFi? How much do you want to put it into lending, and give customers different sort of investment options depending on their risk appetite. So that's where we see our product developing. We're not there yet, but we are keeping a very keen eye on the DeFi space, particularly on the Bitcoin side of DeFi, to see how it evolves. Because look, if there's one bank on the planet that's going to integrate onto DeFi platforms, it's going to be us, right? It's just a question of finding the right protocol, the right way to doing it, and how do we offer that to our customers in a way where we've thought about the risks, the compliance issues, and everything, and the security aspects. Once we're comfortable with that, then that's something that I can see in our pipeline in the future.
Just to speculate a little bit on this topic, then to close it, like what are we talking about? Is this going to happen next year, within 2 years?
I would probably say next year. I think this year, getting the fund out. We've just launched asset-backed lending, which again is a big product, and we do it without rehypothecating your coins because we're a bank that gives us access to borrow liquidity. Your coins are still at Zapper, but that's the collateral. So, getting access to borrowing against your coins without the fear of rehypothecating of the coins is a big product. So we're focusing on that. We've got the fund coming out soon. That should be a big product. And the other thing that we're working on in the background, where we're in beta mode at the moment, is institutions. Coming back into the institutional space and finding our feet in terms of what are the types of institutions that we want to serve, and how can we best serve them. So while all of that is happening, that's more than enough on our plate. Seeing what happens in the US and how that evolves, and in the background, we've got an eye on DeFi, seeing what's evolving, and maybe next year it becomes something that a year is a long time in the Web3 space. In a year, a lot of things will have developed and evolved, and I think that might be something that we pay due attention to next year.
For sure. And just to also conclude it, you mentioned that you work with institutions. So predominantly you serve high net worth individuals and institutional clients, right? Whereas there's a lot of like unbanked people in the world, like who are not high net worth, right? But they might still have some holdings, maybe, I don't know, 50,000, $100,000 worth of like Bitcoin, Ethereum, or stable coins, right? Are you planning to expand your operations and to serve like, a different type of clientele as well?
Well, that's actually how we started. So back in the day, we used to have 3 million customers, and the average customer would have maybe like a couple of $100 in the account, in Bitcoin, of course. Now, what tends to happen is, this idea of high net worth, and this is a debate even that I have internally within my organization, Constantine, which is, let's say you had 5 Bitcoin 10 years ago, right? that could have well been worth $500,
Yeah.
right? Like a few months ago, 5 Bitcoin was $500,000. So if you have 5 Bitcoin and your Bitcoin holding hasn't changed, within the price appreciation of Bitcoin, all of a sudden you have become high net worth,
Yeah.
right?
Good point.
Now, the problem is that because when you have Bitcoin, you have essentially, without even you realizing, you have a Bitcoin balance sheet. The problem is we all tend to think in dollars or whatever your fiat currency is. And therefore, that tends to be the barometer of your wealth. If we all believe that Bitcoin will do what we think Bitcoin will do, and it'll be worth, a million in 10 years' time or something along those lines, then what we see is a world where over time, people who had 1 or 2 Bitcoin are slowly but surely becoming high net worth. And therefore, it's like, well, which is the bank out there that is going to be the private bank of Bitcoiners if the private banks of the world won't touch them? We will. Why? Because we've been doing it for 10 years. So the reason why we talk about high net worth is because a lot of our customers have become high net worth as time has gone on. And what we find is that for us as a business, at the end of the day, we need to survive, we need to make money. We're much better off serving a small number of customers that have 1 or 2 Bitcoin or more than serving 3 million that have 0.0001 of a Bitcoin. So for us, it's just a way to say, look, if you've got 0.01 of a Bitcoin, by all means, great that you got it, but you might be better off being served by, a Bitcoin.com or an organization that's catered toward that market. For us, we've invested heavily in security and being regulated. We allow you to diversify, you can borrow, you can invest. That means that, from a legal, we started this conversation talking about legal and compliance, right? That means that a lot of our customers tend to be more sort of sophisticated investors. So therefore, as a result, because of the price action of Bitcoin, we had to make that strategic decision 4 years ago that said, hey, hang on a second. If Bitcoin is going to go up to here, then we need to be thinking ahead and thinking, right, what are the kind of products that these people are going to want and need and expect in 5 years' time? And those people are now going to be worth millions, right? We've got so many customers that have 10, 20, 30 Bitcoins with us, but they've had them with us for 7 or 8 years. That money would have been worth tens of thousands of dollars. They're now all millionaires. Their banking needs have changed. And what we always trying to do is stay ahead of what their needs are going to be because we believe that the price of Bitcoin is going up. So we're building a bank for the future of Bitcoin, which is a world in which somebody with a couple of Bitcoin is a millionaire.
So let me ask you just to conclude this part, right? What is the minimum deposit for an individual and for a business to be onboarded with you?
Sure. We have no minimum deposits. We tried that a long time ago, and it really doesn't work very well.
Mhm.
What we try to do is more than anything is we try to be very honest with the products that we offer and be open and transparent about the fact that look, if you want a relationship manager, you want to earn 4% on your dollars in a deposit guaranteed bank account, a bank account that allows you to engage with Bitcoin and where you can earn 1% on your savings on Bitcoin. You get a card, the ability to borrow against it with no additional fees, right? Um, and this notion of you can diversify that product, you can send stable coins in and out. All those things that sound too good to be true to be in one place have cost us and invest a lot of money of investment to get to where we are. So if you want this product, it's $1,000. If that appears expensive to you, then this product is probably not for you. But we're transparent and open about that, right?
Hey, it's a
Um,
$1,000 just to clarify, like as a fee, as a one-time fee, or is it like a
it's
subscription?
it's a subscription annual fee. That's for the retail product, and for the beta product on the corporate account, what we're doing is again we see a world where if you think about traditional finance, right? Um, in traditional finance, being a custodian is a race to the bottom on price. And I think that rather than charge people basis points on their Bitcoin, I'm a Bitcoiner too, right? You won't be surprised to know that, if I'm the CEO of Zapper, that I've got a few Bitcoin myself. At least you'd hope so. And if you said to me, okay, for the custody of my Bitcoin, you're going to charge me, 50 basis points on my Bitcoin. If you believe the price of Bitcoin is going up, 10 years from now, I'm going to look back at that and go, oh my God, that custody cost me hundreds of thousands of dollars because my Bitcoins are going to go up in 10 years' time. So as a Bitcoiner, that to me like gives me the shivers. So as a result, what I want to do is what's the product that I want as a Bitcoiner? I want a flat fee in dollars for my Bitcoin, right? And I think that's a fair price. Why? Because I've got certain OPEX that I need to cover to be able to give you the service. So if I have a subscription that covers that operational expense and I can just make a little bit of money on transactions, then I make money. You've got a great product that doesn't cost you hundreds of thousands of dollars in the future, and it's a win-win for the customer and for Zappo. So for the corporate product, it'll be the same. It'll be a flat fee of $20,000, and you essentially get the same retail product, but for a corporate with extra components of security like 2FA for the directors, because you tend to have more people that are directors of a company. And the corporate account is very much like a treasury solution, right? It's something that is going to allow you to. We don't want to be the Silvergate of the industry. We're not going to do third-party payments. But if you want to do, the 4% on your dollars, send and receive stable coins, earn on Bitcoin, borrow against it, invest it, all those products will be available for corporate. So who are we envisaging? Family offices, but also crypto native companies. Crypto native companies that need to be able to invest their capital, but right now no bank will touch them. Well, we're a perfect product for those kind of companies.
Perfect. That's what I wanted to hear for anyone who's interested to actually go and open an account. You go to xapobank.com and you explore like there's a user journey that will be guided to, right? And then the details you're gonna have. But it's very important for people to understand there's a retail component and there's also a business component. You can be on board as business. Like we're looking forward to do it. We're gonna discuss it after the podcast as well.
No worries.
So there's one last question I will ask you, and I never notify my guests like which
Sure.
I think it's the most beautiful part of it is because it's you're gonna provide me a genuine answer, right? So the question is the following, which is a personal question. Like you seem like a very thoughtful person, Seamus, so I want to ask you this directly. So what is the meaning of life for you?
The meaning of life. Wow. So I I have this view where I was raised religious. My mom is fairly religious, lots of religious people in my family. And as I grew older and older, I become less and less religious. And the more and more I travel around the world and I saw how beautiful the planet can be, it can also be a very ugly place, but it can be an incredibly beautiful place. And I just think that it's a gift that you get 70, 80, 90, however many good years to be on this planet, right? On this rock that's spinning in space, traveling through the cosmos at hundreds of thousand miles an hour at speeds that we can't even comprehend. And, you know, rather than worry about what's the purpose of the meaning of it, just enjoy the ride. So for me, rather than worrying about what comes, after life, is there meaning to life? Why are we here? I think those are interesting questions. But for me, the meaning of life is enjoy the 70, 80 years that you've got here. It's a gift. You never look a gift horse in the mouth. The world is a beautiful place. Enjoy the best things that it has to offer.
Beautiful. That's an amazing reply, and yeah, I really appreciate your wisdom, Seamus. I sincerely wish Xapo to become
Thank you
bigger.
very much.
Yes, to become a bigger, stronger, and more innovative. I know that there's a lot of things we talked really briefly about the AI and like, other like, DeFi elements to it. I'm sure you're gonna be ahead of the curve. Like I know it's very exciting for me because I've started my career in 2012, 13. So I know that like you were one of the first like, industry. So finally like, got to know you a little bit better and to share with my audience. So really happy we did that, and yeah, well, hopefully we'll do it again soon.
For sure, whenever you want. It's been a pleasure meeting you, Konstantin, and hopefully we'll speak again soon.
Thank you so much.